the solo individual real estate practitioner is dead. It's gone away, and it's going away, and it will continue to happen that way. Did you not hear the rumor about Zillow?
No, what's the rumor?
Zillow buying KW, and there was a lot of steam and momentum behind it because the CFO resigned and just put it on LinkedIn is like, I'm no longer part of Zillow. That's all I got to say about that. 2 years ago, August 17, 2024, is when we were saying, when everyone thought the traditional commission models were dead. Do you know what happened to the commission since then?
Average commission from what I hear, because there is no standard commission.
Well, there's an average there is an average after it's sold, so you can start collecting that. So that is an average.
I have heard that the average commission has climbed since then. Is what I've heard.
So when we look at it, according to a February 2026 survey by Clever Real Estate, it interviewed quite a bit of agents nationally, and the average commission at that time in 2026 of February when they did this survey was 5.7%.
Okay.
Before the settlement, 5.49.
Ooh, everybody got a raise.
DFW, turn it up. This week in DFW real estate. The weekly podcast built for agents who actually get paid. Market moves, listing heat, closing streets. DFW agents. Let's eat.
All right, welcome back to This Week in DFW Real Estate. It's been a hot minute.
It's been hot. It's good to be back.
Yeah.
Drinking coffee at 3 p.m. with my best friends.
Dude, it's feels like home.
Feels like home.
Yeah, it feels like home. We're back. Look, there's been a lot of things that have happened since our last show. It's been about a month and a half. You know, summer happened, life has happened, real estate's happened, a lot of real estate.
It's been interesting. A lot of really good stories. The mergers and acquisitions stories have died down. I think we've pretty much covered them all, which is great. So we can now pivot. And there's other good things that are or there's other interesting things that are on the horizon that are happening, and we're excited to dive into them all today.
Wait, real quick on that note. Did you not hear the rumor about Zillow?
No, what's the rumor?
Zillow buying KW, and
What?
there was a lot of steam and momentum behind it because the CFO resigned and just put it on LinkedIn is like, I'm no longer part of Zillow. That's all I got to say about that.
That's all I've got to say about that. Okay, well, there's a Facebook post, and then there's this. This is I don't know. Yeah. I feel like that'd be interesting. That would be interesting. But why?
Look, Stone Capital, they're a private equities company. Their job is to either sell it or bring on more. So something will happen with Keller Williams. Probably is not Zillow, but I did see that, and there's a lot of just chatter going on in the Facebook groups. If you're not part of our Facebook group, it's DFW Realtors Network and Collaborate. Just go over there and join us and share and collaborate and network. I mean, it's a great place to be, as well as support our sponsors. The sponsors of this show, Armadillo Home Warranty. Theron Smith over at Armadillo does amazing work. I've sent a lot of clients his way, and they just rave about it. My mom, who's buying a condo, she's like, "Why would I use Armadillo? All the reviews are negative about every home warranty company." I said, "Well, they don't have Theron."
Yep.
So get with Theron Smith over at Armadillo Home Warranty. Just go to armadillo.one. Tell them that the guys from This Week in DFW Real Estate sent you over there, as well as Homeward Property Management. We're seeing a lot of leases pick up. A ton of leases. The Good Home team has processed more leases than they've done in the entire since 2009. And fast forward, like it's combined, it's a ton. So if you're looking for the best property management company that can help not only get your referral, your client's house leased out with the right tenant in there, and they need professionally managed, go to homewarddfw.com, just hit that referral button, and Dana Wynn and the crew will take great care of them. And then ProCare Home Services. It's a remodeling, make-ready company that can do anything from plumbing, HVAC, roofing, anything you need. ProCareDFW.com. And then last but not least, one of our favorite sponsors, a new sponsor of the show, Utility Direct. And Utility Direct is a company that will help turn on your clients' services, electric, water, gas, sewage, internet, you name it, they can get it done. And the best thing about Utility Direct is that they will edify you. They're going to make sure that they're going to go to your clients when you refer them over. The concierge team is going to make sure that they're going to get your review and referrals sent back to you. So go to utility-direct.com. You can sign up there. It is free. It will create a custom landing page for you so that you can send everyone over, all your clients over there to do their concierge calls.
Woo!
It's a lot.
We should start a rumor. I feel like we have the power to do it. The CFO of Real just got indicted for insider trading.
I don't think you can say that. No, we're not saying
true.
that rumor. No. No, that's a real no. No, we're not. No. I think
That's how rumors start.
Nope. No. But what is not a rumor is how would you like it right now as a real estate agent if you could go to your sellers or your homeowners you're talking to and they're like, Brian, why should I move when I have a 3% rate?
Right. Yeah.
Everyone sounds like they're smokers when they say that.
That every time you do an impression of somebody, they just smoked a carton of Marlboros. That's very true. But no, that is the conversation that agents are facing right now. I had 3 different coaching calls just this morning, and we had some conversation around this.
Yeah.
Right.
And so we're seeing that a few days ago, about 10 days ago, there was a bill that was introduced called the MOVE Act. And Congress has introduced this bill. It's got to pass first. What it is basically making homeownership viable for everyone. That's MOVE, making ownership viable for everyone. I don't know how this is going to be for everyone.
I just think that if you don't make it an acronym, then it's not a real bill.
Yes.
That is official law in Congress. It has to spell something.
Yeah. Oh, I mean, it makes it easy, and you get a movement behind it.
Yes.
And so what this is essentially the MOVE Act will allow homeowners to transfer their existing mortgage, including its interest rate, remaining balance and terms to a new property.
Yep.
Right. The bill does require government-sponsored enterprises, Fannie Mae and Freddie, to purchase and securitize this portable mortgage.
Mm-hmm. Now, so the spread between rates that people had that refinanced and current rates is a massive problem that's keeping the market from really unlocking. We're learning a little bit on the fly here today because I will be the first to admit I haven't necessarily taken the MOVE Act all that seriously until now. It
hasn't moved you?
Long way to go. It is a long way to go. Thank you. We really haven't dove too deep into it. I haven't dove too deep into this, but I would love to kind of flesh this out. I have questions on it, right? Just kind of the fundamental premise. It is, in theory, it's a very interesting idea. I haven't thought deeply enough about it to think about whether or not I think it's a good or bad idea or what the downstream effects could be. My first question would just be like, if we could try to flesh this out, is it the same mortgage? Meaning like if I move, we're talking about, they're basically calling them portable mortgages. I think it's an important thing to understand in this act. Are they saying that you get to keep your existing rate or the same mortgage? Those are 2 different things because you would have the same mortgage on a different asset, which then I think like that's an interesting process type thing. Like, are we re-underwriting the asset, appraisals, all that type of stuff? Or is it just if you do a loan with the same company or same whatever, you get to keep the same rate on a new mortgage? Those I think are interesting. Like I want to know more about that. Like, how do we execute on this? I guess is what I'm trying to say.
Here's the overall breakdown that basically here's how it works in 60 seconds, right? Okay. So right now you sell your home, Brian, your mortgage dies, right?
Right.
You've got whatever your rate is, you sell it, it's paid off. That interest rate's gone. You're not getting it back. Right.
Okay.
So your 3% rate, if you got one of those, or if you're lucky to still have that, your 3% rate is gone forever. Okay. When you buy your next home, you get a brand new loan. Congratulations. You got a brand new loan and it's at 6.5, 7%, whatever it is right now.
Okay.
Right. So the goal is the MOVE Act is to change this. The rate will travel with you. So you sell your home, then essentially what they're suggesting right now and trying to put in this bill is you have 90 days to buy your next home. And you're going to take that existing rate. Here's what I don't understand on this part. Your remaining balance.
So that's what I'm trying to understand. How would there be a remaining balance if you sold your home?
And it says your remaining balance and your remaining term. And then you're going to apply them to your new property. So if you're new,
I guess that would be in a situation where you don't sell, you can still do this. Like if you can afford both mortgages, but
no,
remaining
I don't know.
Maybe if you come up short,
you want to sell, because the goal here is to unlock that this trapped,
right,
housing shortage, right? We're trying to get this inventory we're trying to get more inventory, even though we are starting to see inventory go up. So let's say, again, hypothetically, your new home costs more than what you owe, right?
Okay.
So then you're going to blend it. You're going to carry your low rate on the old balance. You're going to finance the gap at today's rate. The blended rate is still dramatically lower than starting fresh.
Okay. I'm trying to, man, Jesse's getting Gemini going over here. I'm really trying to understand this. I'm going to carry the old rate on my existing balance, blend it with the gap, with the difference between my balance and then the sales price of my new house or my new mortgage, and then I'll have a blended rate. But what if I sold my home? Why would I have an existing balance?
That's a great question. Does that mean that are we allowed to sell our home and carry over the negative equity?
I feel like this is like some aha moment I'm not having right now. Like I feel like somebody's looking at me like, you're so stupid, you don't get it. But I don't get it. I don't know why I would have a balance if I sold my home.
So let's say again, you bought a home in 2021, $350,000 at 3.25% interest rate. Okay. Right? You want to buy a $500,000 home today. Right, without the MOVE Act, your new payment is going to be much higher than what it would have been with the 3.25% rate. Correct.
Right.
So with the MOVE Act, you're going to port. You're going to port the $280,000 balance that you currently have left from that $350,000 purchase that you did in 2021.
Okay.
And then you're going to still finance the other $220,000. So. Because you're buying a $500,000 property.
Okay. So is it saying it's not your balance? Are you saying like the equity you make from the sale?
No, it's saying balance.
So I think what I gather from it is like, we'll talk through this even swap right here.
Okay.
So you essentially, and I don't know if this is actually correct or not, but essentially it sounds like you take the terms of your current mortgage and just move it to another. Right. The sale, the proceeds go where it's supposed to go on the sale of the property.
Okay.
But the terms all stay in place and move to your current property.
So that's what I thought, and that makes sense.
Kind of.
It's a new mortgage, same rate, you're taking the rate. That's different than the blended rate thing that you were saying.
It's still a blended rate. Of what they're saying is you're taking whatever your remaining balance is. Maybe it's because it's a remaining balance of what that. It's almost keeping that you have. Let's say you have $280,000 left on your loan,
right?
And you still have 20 years left,
right?
Right. Then you go and that is, even though you're paying it off, it's $280,000 balance.
Okay,
then you're going.
I see what you. So you basically just get like I get it. So basically, they take a snapshot of what your balance was when you sold, and say for this term and balance, that's what we're going to do your rate on. And then we do the higher rate on whatever the difference is for the home you're buying. So balance meaning like you don't still have a balance. You still sold the property.
Yes.
Right. But whatever you had on your mortgage when you sold it, that's what we're going to count toward. That's the aha moment I was looking for. Yep. Gosh, now I feel so much smarter.
Because then you're looking at, all right, you're taking the new loan, the $220,000, the gap basically at a 6.5, 6.75, whatever it is. And when you blend it in with your 3.25, you're still at a less than 5% rate. Your payment is significantly less. And I mean, we may be behind because it sounds like Canada, the research I've done on this, Canada and the UK already have something like this.
Man. Poutine and portable mortgages. Those guys are doing something right up there.
You got something going.
The P&P.
I guess that's a really interesting idea. I wonder why people haven't done that already without some bill being passed. Because it kind of makes sense. Like, let's say I'm just like a mortgage company and I want to get more business. I could say, hey, if you sell right now, I'll honor the balance and rate you have on this house, and then we'll blend the rate on the purchase you're making, do basically a new mortgage for that portion. It'll be a fully new mortgage, right? But we'll honor the rate that you have here for the balance you had, and then we'll charge a higher market rate for the difference, and we'll give you a blended rate, and it's a new mortgage. And well, I guess That would have been good business already.
Could have been good business, but because of the way that it's always been, you just getting rid of that low rate. People are going to buy and sell typically not because of rates. To me, even though they have a 3.25%, I don't believe that there's a large number that's being held hostage by their rate by saying I would move because XYZ. Most people are moving because they need to move. Right now, COVID. There's always the exception to the rule. During COVID, you had some people like, hey, I could make a ton more. It would be stupid not to take advantage of this.
Right.
It's always the people. Those are always the people that seem to always sell at the height.
Yeah.
And never at the bottom.
Right.
Most people sell while it's falling and not while it's going up. And I personally don't believe that it's going to unlock that much more properties to sell. I think there will be a few. Now, I have heard rumors before midterm elections come about is that they have talked about eliminating capital gains. I think that
would be probably a bigger needle mover.
I think there's two needle movers that should happen versus a portable mortgage. Is that first-time home buyers should have a low special interest rate that they get from the government that they have to stay in their house a certain amount of years. If they sell beforehand, they pay a penalty.
It's like when you don't pay the interest only on the couch that you got from Rooms to Go.
Yes, and then it accelerates, right?
Yeah.
So I believe that we should be incentivizing first-time home buyers that way, not people that have already owned a home to move up. As well as if you eliminate capital gains, I'm going to tell you, I am one of these people that if capital gains was eliminated, there's quite a bit of product that I would go out and sell.
Oh yeah, agreed. Yeah, I don't think people take that. We don't have that conversation enough. I just don't think people are think deeply enough about their taxes. So I guess. My question on this, the MOVE Act, then, is what is the act? Because as we're describing it, it seems to me like something that could just happen already. What is the bill? What is the bill?
Well, I guess the bill is making it to where Fannie and Freddie will securitize it.
Okay.
It's making it to where they have to securitize this.
That makes more sense. Okay. So that's going to be a Freddie and Fannie backed thing because right now it would be like a non-conforming. It wouldn't
Correct.
be. Okay.
Yeah.
Cool. I think it's cool.
Look, I think anything helps. Again, go back to, I still think that we should be creating first-time homebuyer better programs for that rather than the unlocking of the 3% equities to take, the 3% interest rate to take with you. Because I still don't. How does that help the everyday homeowner? Or the everyday first-time home buyer.
Not the first-time home buyer. I mean, really, if you look at the stats, that's the demographic that's locked out of the market right now. So if you're gonna spur the market forward in a meaningful way, that would be the demographic to go after.
Yeah.
That makes a lot of sense. Well, there's some very terrible statistic around people under the age of 30 and the percentage of them that live with their parents still. I didn't like it. I heard something. I read something. Yeah, and it's not because they're bums. It's just so hard to get a house.
I think they also don't have good money management, but
well, nobody's teaching that.
No, there's no financial money management. Like that's an education. That is an education problem. Where I personally believe it's designed to keep people renters.
You think so? Are you the what is it?
You own nothing and
the one world order thing. You'll own nothing. And
I'm not part of that. I believe that there is.
No, you just believe that.
I believe that there's part of that is out there.
I think it's definitely real.
You see that to where the obstacles to home ownership. If we're going to be creating something like this again, the first time home buyer is what drives this market. If there is a good first-time homebuyer demand, number one, we'd need to go out and build affordable housing, but that would also give builders the incentive to go out and build more first-time homebuyer products. Maybe first-time homebuyers may be willing to compromise a little bit more and live out in the rural, more commute time.
Sure.
And then that will then, eventually, those first-time homebuyers will eventually be move-up buyers. Like we got to create, in my opinion, you got to create the bottom. We're not. Why are we trying to go after the middle? Because if you don't have the first, those move-up buyers and unlocking the 3.25% interest rate, well, if you don't have a first-time home buyer, we don't have that group.
You're going to run it? Yeah, 100%.
Yeah.
It's a really good book called Arrival City, if you ever get a chance to read it. It's kind of about exactly what you're talking about right now, the development of the outskirts of major metropolitan areas, and if you basically bridge the gap between them, how much economic upside there is. It's really interesting. It doesn't focus on America as much as it focuses on Asian countries, but really, really interesting book. Wow, that is 49% of people under 30 that are adults. But I think that's probably higher than I would have expected. But that also includes like 18-year-olds. But 12.7% of people under the age or between the ages of 30 and 34. That's a lot more than I thought it was. That's the demographic that if we don't find a way to make entering the market more affordable or more accessible in this country, it really doesn't matter what other problems you solve for existing homeowners. The market will still continue to stumble forward because you're just not injecting new homeowners into the conversation. There will be no lifeblood, right? Eventually people will sell their final home, but if you don't have accessibility to the market for first-time home buyers, you're just not feeding the machine, and eventually it fizzles out. Like, that's a problem that we have to solve. And I don't know how much regulation could do for that. I mean, you can do special first-time home buyer loans, insured, and all that type of stuff. It's also just got to be affordable, man. Homes got to be affordable.
Well, I met with an apartment broker, multifamily broker, and where we also have to see is we've got to see the job market rebound. I mean,
yes.
The Dallas Fed reported, for the first time in years that we've lost jobs. We're not seeing the wage growth happen. And so what we're seeing here, even with the struggle with first-time home buying, home ownership, is that we're seeing even the working class workers struggle with paying their rent, or good quality tenants paying rent.
Yep.
And so it's kind of a ripple effect all across.
We keep talking about, we have a housing shortage in America. And I've always thought that was an interesting conversation because I don't really know how you quantify that. Right now in the multifamily space, rental rates are down, and they're down big. And I mean, as multifamily operators, all the people in our circles that we talk to, we're not really forecasting a lot of rental rate growth for probably the next several years.
Well, there's just a saturation of inventory.
Yeah, massive saturation. And so it's kind of like, do we have a housing shortage, or will more people just occupy apartments for much longer? Like there's a lot of apartment supply right now. So it's like, when people, and I just think that's a very generic thing to say. When people talk about having a housing shortage in America, I don't really understand what that means specifically.
I really think, I think we're saying it incorrectly. Mm-hmm. I think that instead of being a housing shortage, I think it's an affordable housing shortage.
Yeah.
Sure.
That especially, I mean, we see that statistic, 18 to 29. Yeah. 49% live with their parents.
Yeah. We don't have enough affordable housing we don't have enough affordable housing that would make it more economically feasible or financially feasible for someone to purchase a home rather than rent an apartment.
Yeah.
That's what we don't have. And we overbuilt in most metropolitan areas, especially Class A apartments over the last several years, that their rental rates are dropping like a rock. So it's actually working against the home buying market. When rental rates continue to drop, homes have to become much more affordable for it to make more sense for someone to buy.
Agreed.
I mean, it was, what was it? What year was it? I can't remember, where we finally kind of had that little thing of like the rent versus buying thing sort of flip-flopped on a certain time of ownership. I can't remember. I'm like butchering that, but it was always like more affordable to buy for the longest time over a certain time horizon. And then that sort of flip-flop. Now, I don't know how much more affordable housing needs to get to be able to get first-time home buyers to be able to buy a home that over maybe, let's say, a 5 to 10 year time horizon is going to be more affordable than them renting, because rental rates are down.
Well, you start having, so when you look at this again,
2022 and 23, 24. Yep.
To be 2022 to 2024 is when it accelerated that it became more affordable to rent than to buy. Right. And we're now seeing, if we want to look at the correction of this market, right, is that we have seen foreclosures hit their 6-year high. And it's up 21% in the first half of 2026 compared to the first half of 2025. And we always the only problem that when we start talking about this is Colton Lindsay actually did a great Instagram video on this. He's like, it was kind of a making fun of the buyers. They're like, I'm going to wait for prices to come down. And he's sitting there with his arms crossed, and it's 21, prices keep going up, right? Then finally 26 happens, prices dropped. But it's still higher. The price drop in 26 is still higher than them in buying in 2021.
Right.
And also interest rates are higher.
Interest rates are higher. And what I tend to find is those same people are like, oh, I don't want to buy now. Now it's a bad time. Prices are dropping like a rock. You know what I mean?
Yeah. That's why I've always said when buyer sentiment is bad, it's the time to buy, and that's what it is. And so, when we talk about foreclosures, everyone goes back to the 2008, the great financial collapse. And this is not what that is. Like, even when we talked about it in the past, like, this is like, during 2008 at the peak of the foreclosure crisis, 1 in every 54 housing units in America had a foreclosure filing, right? 1 in 50, for every 1 in 54. Now it's every 1 in 632.
Yeah.
Right. So, like, what we're seeing is we're now getting back to that corrective normalization, which is what we've talked about.
Yep.
I was talking to an agent today that we used to do another podcast on, and he was mentioning how he's like how scary it was the show that we did about stagflation is seeming like it's coming true.
You said that in like 22,
23, something like that. And we had mentioned about this stagflationary market, and almost feels like that's where it is.
Yeah, we talked about this on that show, that the most realistic outcome is not some cataclysmic failure of the system. It's just a long-term, slow-moving market until the natural economic variables figure themselves out. Wages, prices, and interest rates, all that matters.
Yeah.
And when they're out of whack, you're just not going to trade that much. You've got to get them back into whack.
Well, we never like to, I think as salespeople, we don't like to look at the stats and the funnels, right? Because what do we just like, I just want to meet people. I just want to make money. Sure. But when we look at the stats, when we get to go back and play armchair quarterback to all this, 45% of the Q2 2026 foreclosure auctions involved loans originated in the year 2022 or later.
Okay. Yeah, that makes a lot
of sense. So 45% of those filings, those loans originated in 22 or sooner.
Okay.
Right. And when we think about that back then, and even now, a lot of those people were buying when rates were climbing. They were going up fast. Many of them were FHA loans.
Yep.
Right. And 29% of the FHA loans originated since 2022 has had a debt to income ratio above 50%.
That's just wild. But that is a cultural moment where everyone was trying to buy a house and would do whatever they could to get it happen.
Well, you do that. And then let's factor in what have felt, and we talked about this on the apartment and multifamily side, is that you buy a house, you're happy. You're like, all right, my debt to income's a little bit high, but I can afford this because it's a fixed rate. Well, it's not, because what you're not factoring is insurance premiums have gone up 58% in Texas over 5 years.
Wild.
And then property taxes that didn't stop going up.
Yep. So it's not a fix. Your mortgage payment, your PITI is not fixed. It's going to go up every single year.
No, so you're already at over 50% debt to income ratio.
Yep.
And now the struggle is insurance has gone up so much, taxes has gone up so much.
Yep.
And now you're getting squeezed because groceries cost more, gas costs more, electric costs more. And now it's all crumbling.
Well, you don't really have any equity if you bought back then.
There's no equity. No.
So it's really different. You can't just sell.
No.
Right? So that's where the foreclosures from that particular time period of people buying on loans that are high debt to income. It's pretty basic math, right? The rest of your expenses increase, your wages don't go up, and you don't really, and the value of your house is likely decreased a bit since you bought it in 2022. Unfortunately, that's a recipe for disaster.
Well, and who's to blame? Right. I've seen a lot of And I've also seen a lot of agents distancing themselves and saying, I'm not one of these that said this. Is they would say, date the rate, marry the house. Right. I think we made fun of it on the shows back then.
We've made fun of it several times. Real estate agents should not play economic advisor. You should purchase a house with the rate that you could afford for the duration of the loan. I hope that realtors hear what I just said and don't ever say that again. Every one of the buyers that you represent should be purchasing a home with a rate and a payment that they feel they can afford for 30 years if nothing changed. I'd marry the home, date the rate thing is really, really, really dangerous and bad advice.
Yeah. I mean, when we look at all this, where's our opportunity now as real estate agents, since this is a, real estate, related show, is that I would brush up and understand short sales because you're going to start talking to more and more and more homeowners who we either will tell you up front or as you take on the listing or as you get further involved in conversation, you're going to find out that they're close to or behind on their mortgage. Mm-hmm. And then you go to find out that they have a government-backed loan, an FHA, VA, and there are certain guidelines that you have to follow. We should have Don Lawrence on the show to talk about this, is that you can't just go and lower the price or, it's subject to short sale approval, but, lender approval. But at the same time, those lenders have government guidelines they have to follow since it's an FHA insured loan. Yeah.
Yeah. A very high percentage of the agents that I work with on the coaching side have done at least one short sale this year, which is surprising, or not surprising, but it's obviously a big change from years past. When it comes, we like talking about the market because I think it's really important. It doesn't change the opportunity that the agent has. So just understand, the other statistics are still very, very valid as well. Most agents are not out there working right now. They're not out there working their database. They're not trying to do deals. They're not trying to take market share. We are involved enough in this business on a local level to tell you with 100% certainty that the agents that are getting up every day trying to grow their business are succeeding at a high level right now. Your competition's getting out of the way. Don't let anything that we're saying on this show make it seem like it's doom and gloom and it's a bad time to be in real estate. It's actually a great time if you just buckle down and do the work. Yes. There's a lot of people that need your help right now. I was looking at the stats, just a little hot sheet this morning. In the rolling 7 days on the MLS, 75 or so 100 new listings came on in the Netris MLS, and we've had about 3,800 cancels, expires, or 3,500 cancels, expires, and withdrawals, and then 3,800 closed. So if you take, this is not a perfect science because the listings that came on this week are not the same as the ones that closed. But if you think 7,500 new listings, 3,500 came off the market without selling, and then 3,800 sold all in the same 7-day period. It's right now, a listing that goes on the market has a 50% chance of not selling. And that is mostly, I think, because of the unreasonable expectations that sellers have set for themselves and agents that aren't really great at making deals happen and solving their agent's problem or solving their clients' problems. It's like Nick says all the time, money changes hands when problems are solved. There are agents out there that are really, really, really helping their clients navigate difficult situations right now. And there are agents that are sitting back and just kind of hanging on and hoping that this all passes, which is not going to. But I mean, I just tell you, there are a lot of agents out there that are growing their businesses. We see it every day on the front lines of being in this industry. There's just a massive amount of opportunity to take market share right now because I think a lot of people are getting out of the way.
Well, when you hear things that sound doom and gloom, even when I do my weekly team meeting, I have to be careful because it makes it seem like that this is the bad time or everything, the sky's falling. And when we look at this in general is doom and gloom means that there's massive opportunity. And the best thing about doom and gloom is that everyone else thinks it's bad. If you can see through that fog and know what direction you want to go in, we can think about it. When investors are picking up, the activity in investors are picking back up.
Oh, yeah.
For the last couple of years, you couldn't really help an investor because the numbers didn't make sense. Yeah. And we're going to start running back into that. If you track the market and you're tracking your local areas and neighborhoods correctly, and you're starting to build your investor list, now you got your pulse on the finger there, and it's like, holy, I'm going to call Brian because Brian buys in this area. And I know Brian is only looking for rentals. I know that he can pay a little bit more than Jim over here, who's looking for fix and flips. And fix and flips, he's got to have a certain amount. And so I'm going to start building my investor list. I'm going to start talking to homeowners who are distressed or need a cash offer. I'm walking a property tomorrow that was sent to me by an agent. And I mean, it's in bad shape. And, you know, the expectation, they wanted $200,000. I said, there's absolutely no way in hell I could pay $200,000. Started walking through what my numbers are before seeing it. And they said, all right, let's go out and look at it. And I haven't been sent as many opportunities as I have in the last couple of weeks in all of last year.
Yeah. It's starting to happen again. Yeah.
Yes.
100%.
And this is, I believe that this is a reset to get your prices back down to normal, and understand if you're buying a buy and hold market, you need to know, especially if you're an agent investor specialist, you need to understand the buy and hold numbers, because those numbers are lower than what it used to be. It's no longer the 1% rule is not working. You need to be about a 1.25% to 1.5% to factor in property taxes and property insurance to offset that, or a decline in maybe a lowering of expectations of rent increase.
Yeah, we haven't talked about that enough. Like, we've talked a lot on the show about expireds, cancels, FSBOs, like places where I think there's a lot of opportunity for agents right now. If you're just like willing to get old school and just go out and have tons of conversations, I think that's a really great way to be growing your business right now. But we see this on the management side. You know, there's a ton of investors in the marketplace right now that have had cash flowing properties for a long time, have a lot of equity in them. They're really no longer cash flowing because rental rates have not picked up, but insurance and taxes have. They've built a ton of equity and now they're cashing out these properties. Well, because they're just cashing out and they've made good cash flow for years, they have a lot of equity, and the properties probably need some work because they've been inhabited with tenants and who knows what the conditions are in. They're liquidating at a discount because they just want to get out. And they've made great money. I don't say they just want to get out, but it's expensive to carry a non-cash flowing property for an extended period of time. And if that's your natural cycle, and you don't want to wait another potentially 5 years for this property to start cash flowing again, you're going to liquidate. And so that is a big section of the market that's reopening up, is essentially investors trading out and other investors being able to come in, purchase at a discount, put their own money into it, and potentially cash flow those properties. Like, we've not seen that opportunity for a few years now. And if I was an agent looking for where can I go and build a list, where can I get some market share, that is a section of the market that I would be trying to get as learned on as I can right now, because I think over the next few years, you're going to start to see a wave of available investment opportunities come back into the market.
B, what does August 17th, 2024 mean to you?
I was trying to think of something smart to say there. Nothing
smart. Nothing good. It wasn't memorable to you.
It wasn't memorable. Maybe it was.
It's memorable to a lot of people in the industry. That's when the NAR settlement took in effect.
Oh, okay.
Right. 2 years ago, August 17th, 2024, is when we were saying, when everyone thought the traditional commission models were dead. Do you know what happened to the commission since then?
Average commission, from what I hear, because there is no standard commission.
Well, there's an average there is an average after it's sold, so you can start collecting that. So that is an average.
I have heard that the average commission has climbed since then. Is what I've heard.
So when we look at it, according to a February 2026 survey by Clever Real Estate, it interviewed quite a bit of agents nationally, and the average commission at that time in 2026 of February, when they did this survey, was 5.7%.
Okay.
Before the settlement, 5.49.
Ooh, everybody got a raise. 99% of our fears are never realized, but we spend an enormous amount of brain power worrying about what if they are.
By the way, buyer's fees nationally went from 2.58 to 2.82%.
Really?
Yep.
Even though some buyers were paying that themselves.
Yep.
Here
in Texas, our buyer's agent average is 2.95%. Higher than the national average. We're great. Higher than before the settlement. And so, we talk about all this, right? And when we think about this, if you put this in dollar terms, like a median DFW price of $385, a 2.95% buyer's agent commission is $11,357. If this were prior to this, if it was pre-2024, August 17th, you would have been at $9,933 at a 2.58% average commission back then. So, agents are making on average $1,400 more per transaction than 2 years ago. And when we look at this is, again, you said that is that I'm going to use the word catastrophize, right? Yes. We in our minds build up the worst case scenario that could happen. And when we start to do that, I also look at it as fear continues to breed other fear.
Yes.
And this is the part where I'm going to push. One, we can't talk about real estate commissions, but why you should be, even in our real estate group, the DFW Realtors Network and Collaborate group, because when you start to only surround yourself with people that have negative thoughts or their fear-based thoughts, even if you're strong mentally, there will be at times when you're vulnerable and it will start to erode away that positive or strong mental energy and thought process.
Your environment controls your physiology, your thought process. It's 100% true. When you surround yourself with people that are afraid of the dark, it's just going to seep in. What's an interesting, really quickly, Jesse, we can just estimate the average home value in America between 2024 and now. I believe that's gone down, right? Or average sales price. So an increase in average commission at a time when average sales prices are dropping is very interesting because that shows the value of the agent. People actually they're making a little bit less on their sale proceeds wise, I would imagine, right? Because if you have sales prices that are dropping, it's like simple logic would say that people are making a little bit less on the sale than they were 2 years ago, but they're paying their agents more. That's really, really interesting.
Well, I mean, if we think
down
about
2.7 year over year, so we can just assume that between 2024 and 2026, average home sales prices have come down across the country slightly.
Even if they've stayed flat, they're still earning more,
right?
Like, and look, everything costs more. And so 75 to 82%, this is a range that of sellers in Texas that are still offering to cover all of the buyer's agent commission through concessions. Again, the feared shift when buyers suddenly had to pay their agents out of pocket. And this hasn't materialized at a scale because, look, again, it's the market. Yeah. Now, if we ever entered into a COVID-style market again, I'm going to tell you right now, sellers will not, everyone's opportunistic. And depending on the markets we're in, will shift where agents have to find their value or show their value and expertise. And so, if we were in a COVID-style market, yeah, more than likely buyers would have to be covering their buyer's agent commission and representation. And I'm sure that the good agents would find ways of still getting that built in or covered.
Man, what do you think is the future of, I don't know, we have this next thing we're talking about pros and cons. Why are so many agents struggling in this market? Is it just they're not working hard enough? Is it just they don't see the opportunity? And where do you think the industry goes from here? I know you have a lot of thoughts around aligning with teams, the evolution of brokerages. Do you feel like the industry fundamentally changes just because so many agents are just not making a living doing this right now? And I think that affects the landscape of brokerages, teams, all the things.
That's a great question. And
more of a musing. That was a poorly posed question, so I apologize.
But it's a great question in general when we think about if we think of it as a high level view, that just like the August 17, 2024, we thought it would have been catastrophic in a commission-based industry and how brokerages and how agents earn their money. We thought it was the end of traditional real estate. Yeah. And because of the way the market was going, the market has helped kind of still stabilize that or, continue to show the value. And what we have currently now is my belief, and if you ask any big box and big brand brokerage, if you're going to get the real truth behind it, is that my belief is that the real estate teams, the enterprise real estate teams that are part of like a Place. By the way, full transparency, I am part of Place. I'm not just a homer of it, but I see what they're doing. Is that the large conglomerate real estate teams is going to be the next movement that is going to be able to support the real estate industry at a high level. And here's the reason why, right? What we're seeing, just like in real life, we're seeing the middle class do what? Die off, right? It's shrinking.
Contracting.
Right? We're seeing that same style happen here in the real estate industry. The individual agent is shrinking. It's going away. And when I say that, everyone always throws out the exception, by the way. They're like, but this person over here, and I'm like, you can only name a few people doing this at a high level.
1.4 million of us. If you can only name a few people, then yeah.
Right? There's always, what I'm saying is there will always be exception to this rule, but the solo individual real estate practitioner is dead. It's gone away, and it's going away, and it will continue to happen that way. And the consumer, as they experience better service, better expertise, quicker response times, more business-like related services, they're only going to want to experience that. Right? It's the whole reason when I talk about, and this is not to hate on brokerages or anything else like that, why did Bed Bath & Beyond, we made fun of it, why did Bed Bath, Jesse's over here laughing, why did they want to get into the real estate business?
They wanted to. It's synergy across the homeownership journey.
Marcus Lemonis has said it's still the real estate industry. Buying of real estate is still fractured.
Exactly.
And the companies that will figure out how to make it a seamless experience are the ones that are going to dominate.
Yep.
And we, as real estate agents and real estate brokerages and brokers, if we don't get aboard and aligned with that, then we're going to be left out.
Yeah.
And so companies like Place, if you look at, what even Rocket Mortgage and Redfin and, what Compass is trying to do, they're trying to make seamless experiences. Serhant has come into the Dallas market with momentum because it's Serhant.
Yep.
But that can only last, in my opinion, so long. A celebrity-like name can only last so long before it fizzles out because every consumer wants seamless, positive experiences, and they want it at competitive pricing.
Yeah, I don't disagree. I think the road ahead for the individual agent most likely will be it will be evolving. The individual agent doesn't need to go away, right? To hit my goals, for most agents, if I sold 25 to 30 homes a year, I'm making a very good living. If the individual agent's business goes away, it's going to be because they, of their own accord, were not able to build that business that provided that seamless homeownership journey. It is possible to do it on an individual level. Agents just have to do it, and that is, yes, my observation is that the majority of agents probably won't put those pieces together. The ones that do, I think, will excel at a very high level. And the rest, I think, will either lose to the industry or they may be better off aligning with the team.
Well, yeah, I think that, first off, every agent that got into this industry and made this a career choice had an opportunity to sell 20, 30, 40, 50, hundreds of homes.
Sure.
When they didn't, they chose not to, because what they're doing is they're choosing not to, I hate to use the word lead generate every day. Like I hate saying that, but they've chosen not to put either themselves or mechanisms or systems in place to find ways to attract motivated buyers and sellers every single day. They've chosen not to continue to follow up or stay in touch or to ask their sphere for business because they're not salespeople. These are all choices that we make.
Sure.
When I choose not to follow up and then I have a client, which happened recently, use somebody else or make a different decision because it wasn't aligned within their time frame and my time frame, well, that's on me, right? And so that is where the large teams, what will end up happening is that you will have these large teams that will become the brokerage-like. The brokerages will then start supporting will be more of a supporting mechanisms for these large team conglomerates. I mean, look, Place as a whole is buying up everything. They just bought another title company. They just bought. I can't even tell you what they bought. the data that they own is freaking phenomenal.
Yeah.
And so if we were an individual agent, what we're armed with, we have AI. And if we use AI correctly, does that plug enough holes to keep our boat floating long enough to build momentum and keep it going for another 5, 10, 20 years? Maybe it does. But I'm telling you that these large corporations that are taking everyone's data and that they start using it correctly,
Sure.
and they start giving Bed Bath & Beyond coupons and Container Store coupons.
People like getting coupons.
Right? Like,
Truth.
Think of it. Why? These aren't dumb people doing this, by the way.
No, these are probably the smartest people in the business that could be doing these things. I agree 100%. It'll be interesting to see what happens over the next 5 to 10 years with the individual agent journey. Like I maintain that there will always be space in the industry for the individual agent, but the individual agent will need to be providing the type of service and seamless journey that the competition is going to be. And that fractured ecosystem is quickly coming together and creating a better product. And the individual agent needs to figure out how to do that themselves.
Here is what will end up happening is that the teams will be taking over. I've already said that, but the agents, what has taken so long is that the agents that have got in previously, we all have this entrepreneurial business owner, CEO mindset. And the more that we see the new agents, agents coming in or filtering back in, they're realizing that, look, it's not bad. They don't care to be the business owner anymore, right? What do they want to do? We want to make sales. We want to make our money. We want to have leverage. We're here for some time freedom too.
Yeah.
And the teams can build all that. So if you can make $225,000, $250,000, $300,000 a year and have time freedom,
Yeah. No,
why would you not?
Couldn't agree more.
We still have the best opportunity in this industry, whether you're a solo agent, whether you're on a team, we still have the best opportunity to make 6 figures and to make an amazing living, better than any other, in my biased and unbiased opinion, more than any other industry out there.
Legal industry,
Legal.
for sure.
Yeah, I only think in legal terms.
I agree. I cannot think of another business that you can start with the amount of leverage you have from a financial standpoint, meaning the return on your money that you're investing into your business. I can't think of another one that gives you the most the upside that real estate does.
Yep. And you just have to start thinking in terms of how can you stay in front of your client. And look, one of the best ways to do this is through Utility Direct, right? That is, if you're listening at the beginning of the show, it's one of the sponsors, utility-direct.com. Just go there, take a look at it. This is an opportunity not just for your buyer clients that is buying a home or your renters, right? Renters, everyone needs to turn on electric. Everyone needs to turn on internet and alarm systems and services, et cetera. But this is a great way to use in your database where you say, hey, Brian, I just launched, I'm testing out a new service for my business. I would love for you to test it out for me, where we could potentially help you save money on your internet and electric. Would you be interested in testing out and giving me feedback on the service? Yeah. Every one of those that I've tested out in my database has said yes to that. Yep. That is another touch, another service that I'm adding. And again, they come back to me so that I can have that conversation. And, oh, by the way, do you happen to know anybody thinking about buying, selling, or investing in real estate? So my suggestion is you got to start thinking in terms of how do you become more attractive? How do you become that magnet to start pulling people in? And utility-direct.com is one of the best partners to go do that because it's free and you make a little bit of money doing so. So it doesn't cost you anything. You can make money doing it, and it gives you a reason to be attractive to your database. Sign me up.
Huge. Yep, 100%. So check out utility-direct.com. Click that partner with us button, I think is up there as well, and it'll break down how you can start utilizing that service in your business. Good show today. It feels good to be back. It feels really good to be back.
We're going to do another one next week, or
we're going to do another one next week.
Before you leave?
No, I'm already going to be gone, but I'll do it. I'll pipe in.
I don't know if Jesse knows how to do that anymore.
We'll do it. We'll figure it out. Or we could do it before I leave.
Look, you need a show like this, by the way, go to tourstudios.com. Jesse's over here he's banging out new shows and content. He told me he signed like 4 new shows starting here at Tour Studios.
Wow.
I think we're going to have to soon exercise our ownership in this.
I know. We
and
need
start
to get
taking
an
money.
affiliate URL landing page on Tour Studios to see where this traffic's coming
That's
from.
right.
All right. Well, check out TOREstudios.com, the home of Jesse and Tour Studios. That's awesome.
Don't forget about joining us on Facebook, DFW Realtors. Collaborate, network, and collaborate. See us over there, and we'll see you on next week's show.
Definitely will. Thank you, guys. Talk to you later.
DFW.